I'm Kalila Reynolds, and welcome to another episode of Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. Come on, let's get this money.
To trade or not to trade? That is the question. We're talking about foreign exchange trading. Should you try it? What are the pros and cons? We learn more from General Manager for Trading and Treasury at JMMB, Kwame Brooks, and the financial engineer, Marsha Gaye Miles. And later, the analysts join Marc on the latest stock market developments. It's earnings season. We take a look at iCreate, 138 Student Living, JMMB and Mailpac's results, and iCreate raises $24 million through a bond issue arranged by Sagicor. We'll discuss. But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart. Credit to businesses grew by 20% last year, while lending to households was also up 16%. That's according to the Bank of Jamaica. BOJ Governor Richard Biles says new loans are being issued at better and more competitive rates than before. He adds that the growth in credit is a stronger sign that the BOJ's monetary policy has been bearing fruit. The bank has maintained its overnight policy rate at just 0.5%. CARICOM is calling on telecoms companies to eliminate roaming charges in the region. The call came at CARICOM's 31st Heads of Government meeting last week. Incoming chairman, Barbados Prime Minister Mia Mottley, says affordable and accessible regional communication is an absolute priority. The group has tasked Grenadian Prime Minister Dr. Keith Mitchell with leading the effort and meeting with the regional telecoms companies. According to Mottley, it's hoped that the region's first across-the-board roaming rate will become a reality by the end of this year. Real estate company First Rock Capital Holdings listed on the Jamaica Stock Exchange last Friday, February 21. It's the first listing on the JSE for 2020. The company's Class A shares listed on the US dollar market, having raised some $9 million, nearly 50% more than its $6 million target, while the Class B Jamaican dollar shares are listed on the main market, having raised over 580 million Jamaican dollars, about 65% of target. The Jamaican dollar shares gained 10% on its first day of trading to close on Friday at $17.77. However, the US dollar shares remained unchanged at 12 cents US. Future energy source company Fesco is looking to become the first fuel network in Jamaica to list on the Jamaica Stock Exchange. The company is planning an initial public offer for listing on the JSE's junior market in the fourth quarter of this year. The deal is being arranged by NCB Capital Markets. Fesco was incorporated in 2013 and has 14 locations across the island. They plan to add 7 more by the end of the year. However, the announcement coincided with a tragedy at their Mandeville service station on Friday. There was an apparent gasoline leak at the station, resulting in an explosion and massive fire. 1 person has died, and at least 6 others were hospitalized, some with third-degree burns. Pulse Investments will be seeking to raise more equity in an effort to grow the company and push its brand into more markets in the Caribbean and worldwide. The board is reportedly considering a renounceable rights issue, a 3-for-1 stock split, or even an additional public offer. Executive Chairman Kingsley Cooper says they're looking at a combination of property expansion, acquisitions, and expanding their creative businesses. Pulse is reportedly eyeing stakes in Ivory Jam, a popular New York-based radio station with a large diaspora following, as well as a cosmetics company. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. Taking Stock is filmed on location at iCreate Studio on Hope Road.
There's a surplus of unfilled jobs in the creative industry. Kickstart a creative career with iCreate Institute.
Now I'm at iCreate. I just love it.
I saw where I was learning things that I could utilize in my present job.
And I have all the skills to do every basic animation thing now.
Jumpstart a creative career with iCreate Institute at UCC. Visit iCreateEDU.com.
This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy.
Welcome back to Taking Stock. Well, this should be fun. This is going to be a very interesting discussion because it's a topic I get asked about a lot. Probably one of the topics I get asked about the most, and that's foreign exchange trading. People always ask me, Khalila, what do you think about Forex trading? Should I do it? Is it legit? What's up with it? I've personally never tried it before, not for lack of trying by one of the persons on my panel. Her name is Marsha Gaye Miles, and she calls herself the financial engineer. We're also joined today by Kwame Brooks. He is the general manager for trading and treasury at JMMB. Welcome to Taking Stock.
Thank you for having me.
All right, let me start with you, Marsha Gaye. First, explain your title, financial engineer. What's that?
Well, actually, my background is in engineering. So I have a master's in engineering, and I've worked in the capacity of engineering. But 2 years ago, I was introduced to foreign exchange trading, and God has been good because that became what allowed me to replace my income when my job quit on me. Mm-hmm. And so because I'm providing financial solutions and I'm an engineer, I've been called the financial engineer, and I've just adopted that title.
Okay, so what is foreign exchange trading?
Good question. Well, one thing I like to do is just simplify everything I'm talking about. So for me, foreign exchange trading, foreign exchange market, let's start there, is a global market that allows for you to exchange currencies. As simple as that. So all the currencies on the planet belong in that global market. That's the foreign exchange market. And we already participate in foreign exchange trading, whether or not we believe it. Whenever you are deciding to go and travel, and you're going to go to the bank and purchase the US dollars, if you're going to Florida, for example, you would have sold your Jamaican dollars and bought US.
Right.
When you return from Florida and you have extra US and you don't want to be using it in Jamaica, you'd have now sold back to the bank your US and bought Jamaican dollars. Mm-hmm. That's foreign exchange trading. And that's foreign exchange, that's participating in foreign exchange. And it's similar to foreign exchange trading now because the foreign exchange market is really electronic. It's all online, and in that market, we're doing a simultaneous buying and selling of currencies just like that over-the-counter example I was talking about. Mm-hmm. It's actually the largest financial market, the most liquid financial market, and it's global. And we all have access to it. As an individual trader, thank God for the internet, thank God for Al Gore, right? Mm-hmm. Because then someone had the smart idea to create a business.
Al Gore, right?
Yes, someone had the idea of establishing internet-based trading platforms called retail brokers that allowed for individuals like me and you to now go and get a broker, open an account, and have access to the market. And so essentially what we're doing as traders is that now we have access to the market, we can take direct positions or investments in the market when we are speculating that currencies are going to gain value. And that's how we profit. Because just like investments, you're investing when you think that something is going to actually appreciate. Mm-hmm. And so when we know or we speculate that a particular currency is going to appreciate, then we want to invest there and wait for that appreciation. And then whenever we end that investment, we would have made a profit if we're correct with our speculation.
Okay, so when you listen to the news here in Jamaica and you hear the Jamaican dollar, well, typically it's gone just one way, but for the past couple of years, it's been going two ways. There have been gains, there have been losses. You want to buy when it is cheap to buy.
Correct.
And sell when it's worth more.
Exactly.
And that way you make money.
Correct.
All right, so let's fast forward to what the youngsters are doing now. This thing on the computer where I see people staying up all night and staring at the screen and some graphs.
I need them to understand the different segments.
Okay.
So you have the spot, the forward.
Right.
Then there are those who take the speculative positions now. Mm-hmm. And this is the smaller part of the market, by the way. This, by most statistics, is less than 10% of the activities in a currency market. So what this segment is doing is to say that for everybody who are carrying out their business, we think this is what the aggregate result will be. So let's say Euro against US. If we think that the European bloc will be doing more activities, earning more currencies, and therefore in a stronger trade position, we're going to bet that the euro will get stronger than the US. Mm-hmm. Or if the US economy will outshine the European bloc, then the US dollar will get stronger. In this segment, currencies are actually not passing. We are merely taking a bet as to what will happen. So you're actually not trading currency. You're doing margin trades.
So even though we call it trading, it's not actually trading.
You're not actually trading the currency itself.
Okay.
You're really betting against the movement in the currency pair. And you're not passing cash.
Does this have any impact on the Jamaican dollar at all?
No.
Okay.
And none of the currencies. It doesn't really have the impact on the currency.
Marsha Gaye, you've been doing this, you said, for 2 years.
Correct.
It was able to supplement your income at a difficult time in your life. What makes the difference for you? Why is this something that you think other people should do?
Well, first of all, Kwame is correct. However, when you're able to take an educated analysis towards it, it's not as, well, many people think betting sounds like gambling. And frankly, in this particular case, no. We are
but
taking
you don't
into...
know what the currency is going to be valued a month from now, a week from now, so it really is a bet.
Okay, well, if it's based on that definition...
You can't tell the future.
Correct, we can't tell the future. But we can have analysis done and take into these consideration the factors that he did express to make a high probability decision in the market.
Right.
Yeah.
So typically what's happening is that you're using economic indicators because there are two perspectives from which you take bets. There's a fundamental and there's a technical perspective. The fundamental has to do with your economic indicators. So you will look at all the things that you use to measure the performance of an economy. And okay, when you compare which economies outperform each other, then the currency should outperform the other. Likewise.
How risky is it?
It is very risky.
Compared to other types of trading, maybe say investing in the stock market, investing in real estate.
The difference with the currency market is that every market impacts the currency market. Whatever is, the currency market is like the balancing market. If the stock market is doing well, and the stock market, which our local market is Jamaican now, for the most part. So therefore, you might find people moving away from US investment to the stock market, which means you're selling your currency and you're taking Jamaican to buy stocks. Or let's say the commodities markets globally is doing well. So you want to bet on gold, precious metals, oil, whatever it is, then you will have to take your Jamaican dollar to buy US to invest in those areas. So what I'm saying is that all the moving parts typically goes through or influences the currency market in one way or another. That is why it is so difficult to predict because it's influenced by...
But is it riskier than investing in stocks?
By far.
By far. You agree with that, Marsha Gaye?
Well, here's the deal. Like I mentioned earlier, I'm an engineer that has developed and learned this particular skill set. So I don't have all of the wonderful information that Kwame has and all of those statistics. What I do have is my experience and the experience of others that are winning. And the reality is there is risk involved. I'm not gonna say there's no risk involved. Is it the riskiest? I really don't know if it's the riskiest market, but there is risk involved. But I always liken learning and trading like driving. There's more risk in driving than in flying. And if you drive on Jamaican roads, that's another conversation. And so to put risk management factors in place is important. So when you're going to go drive on a Jamaican road, yeah, you're going to have to do the typical things. You check your rear view, you put on your indicators, so on and so forth, wear your seatbelt. But then you can't predict on Hope Road when the taxi man is going to just stop or the bus man is just going to pull over, or if somebody is going to be a reckless driver and impact you. The environment is there. And so you have to make sure that things are in place in your car, like the airbags and, again, the seatbelt that prevents you from just being totally affected by it. So whenever I'm going to go or when we are trading in the market, we put risk management in place. So, for example, every position I take in the market, I have a low risk appetite. So I'm probably going to be taking 1 to 3% for each position of maximum risk of my entire account. So I am in control of that factor. If you have a higher risk appetite, you do that. And so it literally would have to mean, if I'm taking a 2% risk, that I'd have to lose what? 66, 65, what is the math? How many trades of my account for me to totally build my account? No, 50%. Whatever.
So basically, she's using a portfolio management technique where you're diversifying to manage your risk. And at no one point in time are you investing more than a certain percentage of your total equity in a trade. And then you go for what we call a win-lose ratio, right? So if you're going in to say make 3 and your risk is to lose 1, it means that you only stand to lose 1/3, but you stand to make 3 times. And you will have to lose several times like that before your account will be wiped out, especially when she's using like 2% or 3% of our portfolio to do a trade. So I understand the whole risk management aspect of the trade. Where I go deeper now is into the statistics around those who trade. So there are people who use algorithms, there are people who use technical analysis, the whole statistical analysis.
There are all kinds of programs out there.
Right, there are fundamental movements, all of those, right? But there is even one of the most recent surveys done in Brazil where the region probably has the most traders of currency. And it showed that over a 3-year period, the average person that was trading currency was losing. And of those who were winning, their average daily income was equal to that of a minimum wage worker. So one of the things, in trading and having been in the industry for 20 years, I'll tell you, winning at something doesn't make you good at it. You could be winning because of a momentum. Doesn't mean that you are good at it.
Marsha's been doing it for 2 years.
I'm saying, winning doesn't make you an expert at it. So you can win because the general momentum is going a particular way. But when the tide turns, you don't know what to do. You understand? It's just the same way. Losing doesn't make you bad at it either. You could have a very good trade that goes bad. Why? Because of general market momentum. It's like, the Me Too type of thing. Oh, everybody trading and making money, so why shouldn't I go in it? So I run in it. And sometimes, depends on what part of the cycle you get in, you actually make some money. Did you know anything about it? No. So you can win because of the general trajectory.
You got lucky.
It's really lucky, in a sense. And you lose sometimes, in a sense, because you're unfortunate. But all it means is that you may have to adjust a strategy. It doesn't mean that your strategy is bad when you're trading. And this goes not just for currency, it goes for equities, bonds, commodities, you name it, everything. That's how trading works. So you aim to have a certain ratio of win versus loss. Because you will get some wrong. But for currency trading, I'll tell you, over the years, several people have come to me. Oh, I'm good at currency trading. I say, okay, show me your account. Print out your account, the history over a period of time. If you're this good, I'll give you some money to trade.
To borrow money?
And guess what? Some will come in 3-4 months win, 5 months. And in the 7th or 8th month, they are wiped out. There is hardly anybody I've ever seen with a sustained return on currency trading that you would say, okay, this guy is really good. And here another thing about trading, right? So when you're trading $2,000 or $5,000 or $10,000, it's a different thing from when you get $1 million to trade, or $2 or $3 million to trade. Right?
That's true.
I could put on a trade for $100,000. I don't care what happens. I can afford to lose $100,000. Can I afford to lose $100 million? Different thing. You can't sleep. Even when your trade is winning, you can't sleep. Right? Because there's a different feeling inside of you. Oh my God, what if I lose this money?
Right.
The emotions with the size of the trade goes different. So find your trade in your own $1, $2, $3, $5, $10,000 and you're making some money. But it doesn't even make you a good trader. Because is it scalable?
Even when you put in those risk management measures that Marsha Gaye
Emotions
spoke to?
differ.
Well, I'm gonna.
You lend your friend your car, comfortable because it's a Corolla for 1 or 2 million. Do you do the same when you buy a Porsche for 20 or 30 million? No, because there's more at stake here.
That's absolutely
right?
true. Well, let me have Marsha
emotions
Gaye
are different.
respond.
So, good. that is actually true. Psychology and emotions are real there. And so for me, I know I'm the kind of trader I am. I'll go where my emotions will balance me. And I look to do it on a weekly basis and extract from that, and that's it. I am very much comfortable in a certain range. But one thing I must point out is that what has helped me to gain that level of consistency and sustainability is that I'm not doing it alone. So that has to be a major point. I'm definitely not doing this alone. I am in a community. So even though I have only been doing this for 2 years and there was a bunch of it that was just learning before I really went into mentorship and a community of people who've been doing this for 5, 10, 15 years, beyond the threshold that you spoke about in your statistics, that have been able to now break that glass ceiling that you spoke about. Those are now mentors to me in our community, and fortunately for me, I've been able to shortcut that learning curve because of the fact that we've been able to now adapt their strategies. And so that is really helping at a major level. And so many of the decisions I will make too is not in isolation. It is through possibly a discussion. I might see something from one perspective, share it with another person, another trader. They may have a different perspective, different analysis, but we come to the same conclusion. And then many of us are coming to similar conclusions, but again, putting in our risk management, because at the end of the day, one of the things we always tell people, you don't want to trade money that you're not willing to lose. So we knew that, listen.
Well, what's the average return?
Well, my minimum on a daily basis, my goal is 5%. Minimum. I've had days that have superseded that. I have days when it's been 2%, and I have days when I've lost. Yeah.
But over your 2 year, what has been your average yearly return?
Oh, I haven't calculated a year. I go for daily because I'm an intraday trader. So I just look at what I do daily.
Yeah, but so you may win today, lose tomorrow, but when you add up all of that across a period of time, where does it take you? So like we would know that the equities market last year did about 38%, the year before around 49%, and so forth.
That's a good question.
Because that's the concern for me. That's why I said to you, the people who traded sustainable over a 3-year period, when you look at their return and you divide it up, they ended earning just about what a minimum wage worker would have been earning per week. So that is where I'm going at. You know?
Well, as a trader, I don't look at things like how you guys look at it per annum.
Right.
We don't look at it long term. We're looking at it on a daily. And minimum is that goal. So that's hit.
Right.
And if I'm trading 4 days a week, at least 3, that's it.
Right.
That's for sure.
The other thing is, so when you look at the globally, and this is globally, right?
Okay.
The success rate is still significantly below 5%. Right?
Why so?
Why is that so?
Yeah, I'd like to know why.
It is. So? No, that's the statistics are there.
But why? Has anybody gone into the why?
And that's what I'm saying. You're talking about a world with billions of us, and you're supposed to predict what is the end result of what everybody does, right? What is the impact on the currency? There are several things that could happen. And some people will win. George Soros did it and bet against Bank of England and won big. And his ego, wow. And guess what? In the next round, he was broke. We would have seen it. There are large currency players across, you name it. Goldman Sachs have a room of mathematicians, sit down, engineers, running models, doing all these things. And on an average, none of these guys generate more than 5 to 10, on an average 7% more per annum.
Well, like anything else, high risk, high reward.
High risk. So, and guess what? You will have anomalies. So let me just be clear.
Yes.
There are people who will give you 100% return.
Okay.
How many of them? None of you. Just like there are the Facebook people and all these people who go into business and wow, you become.
That's your message.
But guess what? It doesn't change the fact that on an average, less than 10% of startup business survive. Does it mean that you don't start a business? You do still. It just means that probably for every 10 business or 11 business that start, only one make it. So therefore, you will have the currency traders, a few, who will make it. But in general, for every 100 people that goes in there, 2 or 3 will be successful. So is that something for the average Joe? I would think that risk profile is too high for the average Joe.
And let me give you the last word, Marsha.
I was about to say, and what if the average Joe doesn't have any other option? That's the challenge.
There's always another option.
I mean, I'm just saying, we do live in an economy now where you have educated people that can't get jobs, and they are looking for a way.
Right,
And many of them I have personally opened that door for and have provided a way. And so even if in this season, like you say, maybe not down the road, but even if in this season, we are able to be grateful for the returns that we're getting, we hold on to that.
Yeah.
And then we take it one day at a time and go forward.
So that's what I say. You can be a winner, but not an expert at it.
I did say she would have the last word.
Exactly. And I'm glad that I wasn't the expert, right?
That was very interesting. Well, viewers, listeners, you can make up your minds. You've heard both sides of the spectrum on foreign exchange trading, and you can decide if this is something that you may want to participate in or not. Thanks for joining me, Kwame Brooks, Marsha Gaye Miles. When we come back, we have your market recap, and Marc Gayle is standing by with the Analysts. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. Time now for your market recap. 95 stocks traded across both the main and junior markets of the JSE for the week ending Friday, February 21, 2020. The market rebounded last week with 52 stocks advancing, 34 declining, and 9 trading firm. Nearly 108 million shares changed hands on the Jamaican dollar market, totaling $700 million. Wigton Wind Farm again traded the most, taking up 25% of market volume. The stock gained 4 cents, with people buying and selling 27 million shares in the company. Wigton closed last week at 80 cents. Select F wasn't far behind in volume, also with close to 27 million shares trading and 25% of the market. The stock remained unchanged to start this week at $1.05. And Select M traded heavily as well, with people buying and selling nearly 9 million shares in the company. The stock also remained unchanged to start this week at 92 cents. Turning to the top advancers now, 138 Student Living Jamaica saw the biggest gain. Its share price more than doubled to start this week at $8.89. Paramount Trading Jamaica gained an impressive 29% to open the week at $1.90. And 138 Student Living Jamaica Variable Preference Shares and Siboney Group both rose by 20%. 138 closed Friday at $6, while Siboney closed at 12 cents. On the losing side now, Salada Foods Jamaica was the biggest loser, down 24% to open this week at $26.44. MPC Caribbean Clean Energy was the second biggest loser, down 15% to open the week at $150. And Margaritaville Turks lost 14% last week. Margaritaville opened Monday at 30 cents US. This segment of Taking Stock, The Analysts, is brought to you by Proven Wealth, Jamaica Money Market Brokers, and Ideal Portfolio Services.
Welcome back to Taking Stock. I'm Marc Gayle, sitting in for Kalila while she's on maternity leave. So firstly, big up to our sponsors with Cinco for providing our water. In this segment, we have our analysts here. We're going to be discussing this week in business. So first up, we have Orick Angus. He is Senior Wealth Advisor at Ideal Portfolio Services. And then we have Leovaughni Dillon, Investment Research and Sovereign Risk Analyst at JMMB. And then we have Randy Aird, Financial Analyst at Randy Aird on Twitter. All right, so gents, we wanted to kind of dive in. It's been a crazy week. The last 2 weeks have been crazy on the market. Trans-Jamaica has kind of overlooked, a bunch of stuff, or overcrowded a bunch of stuff, but a lot has happened, and so I want to kind of dive into a number of different companies this week. So I guess we'll start off with, the one that has tongues wagging on Twitter, 138SL, right. 138 Student Living. So anybody want to tackle that? Orick, you can say.
Well, yeah, the numbers were very impressive for 138SL last quarter. If you recall, last year, it was one of my top 3 picks for coming out of 2020.
Right. And just for everybody else, what is 138?
138 Student Living. It's real estate. It's a REIT, real estate fund.
Right.
It's geared towards the main revenue stream comes from the projects that they build up for the UE students.
Okay.
That's where the revenue mainly comes from.
Right.
During the summer period, they benefit from short-term rentals on those properties.
So they provide additional dorms for UE students.
For UE students.
Right. And they're nicer than the typical
than the regular Irving Hall and those
Okay.
places. Yeah. But the numbers have been very impressive. The company delivered the revenues up to $455 million for that quarter, and that was boosted by claims that they received over the last 5 quarters, I believe, amounting to about $150 million, which works out to about $30 million per quarter.
Right.
Expenses were marginal.
Right.
So
What are claims, by the way? What does that mean?
They have a concession agreement with UE,
Right.
University of the West Indies, to, I think it's about 10,000 students per semester that will occupy those dorms. So if by chance they fall short, the university will subsidize.
Okay. So they basically have like a guaranteed revenue stream from UE.
From UE.
Okay, and any variation on that threshold, UE pays and compensates.
Exactly.
Okay.
Exactly. So similar to what Trans Highway would have with.
Right.
with
Okay.
Yeah.
Right, fair enough.
And then as
so what you're saying is that in this quarter they got a one-off.
Right, 150 million, approximately.
But it was for 5 quarters.
Yeah, okay. Exactly. And then going forward from next quarter leading throughout, they'll receive those incrementally of about $30 million or so. Okay. Expenses were marginal and profits came out pretty attractive of about $183 million.
Right.
With a PE times 13, I believe. 12 points.
13x PE.
13x, it's very attractive. The stock delivered over 80% return this week within three business days. So yeah, it's very impressive, I must say.
Leovaughni?
Yeah, man. All right, so I want to weigh in a bit here. So this quarter was very impressive, no doubt about it. But what the company had indicated is that $33 million would have been the profit if you did not have these kind of gains. Right. So what investors should bear in mind is that this quarter, phenomenal, but don't expect these kind of numbers in the long term. So this is something to bear in mind. It trades.
So in other words, so some of the discussion I've been seeing on Twitter is a sense of euphoria that the company has turned around and finally seen the promised land.
Yes.
And therefore.
That's what points are saying, and I mean, there is some momentum there.
Right.
I mean, the price to book value is like 0.6, 60% of book, so it is relatively cheap on that metric, which is an important metric for a real estate company.
It's a valuation method that people use, particularly for real estate
financial companies, and so it's very good to measure them. So,
and the higher, the better.
The lower the better in terms of value.
Right.
Yeah, so that's the thing. So with this one now, you can see that there's some value that is trading below book. But again, the stock is up over 90% now, year to date. And, the year just started. Right. So, and then even at the end of trading on today, which is, February 21st.
Right.
Yeah. Right. At the end of trading today, you can see where the stock actually kind of pulled back a little bit. Like you can see some selling pressure coming in and the buyers kind of baiting. Right. So you might see a correction in the near term. Overall, though, there is some value, but I would caution investors not to get overly optimistic and just, keep chasing momentum. Yeah. So that's, be cautious.
Timing quickly.
Yes. So he was able to finally attain an occupancy rate above the 90%, which was in the concession agreement. That was one of the issues that was dragging down profitability. The other issue was the high maintenance costs, which they have managed to tame within the past year.
So this quarter, the occupancy rate was what? 99%.
99%.
Right.
Yes.
Okay. All right.
Yeah.
Cool.
They have a strategic advantage in being on campus and providing that level of convenience and a secure environment.
Right.
My concern is, will they be able to sustain this level of profitability?
Right. Which we just heard that is unlikely, not at this level.
Yes.
Yeah.
Right. So investors should generally expect the EPS to be a lot lower going forward. Okay. All right. Cool. So that's 138 SL. Then another one I wanted to dive into is iCreate. I mean, we're sitting in iCreate's studios. Two big pieces of news. One was their financials. They published their unaudited financials, and then they also announced that they raised a bond. Right? They successfully raised a bond. So, Randy, quick thoughts on that?
The results were expected. Okay. It's a very young company, and they're in a expansion mode. They recently opened up the Montego Bay the campus, right? And they recently also did a bond raise of $24 million.
So when you said the results were expected, so it just for clarity, the results were, increased revenues 6.8 million, but they ultimately ended up posting a $21.5 million loss. Right.
Yes, so with the high operating costs and revenues not being met as was projected in the prospectus, a loss was expected. In the fourth quarter, there were contracts that didn't materialize. They expect them to materialize in the first quarter of 2020. I'm very cautious about this stock. They ended the year at with only $41,000 with cash on hand. Whether or not they can keep
sustaining those losses.
Yeah.
Right. Okay.
Is a concern. Yes.
All right. Fair enough.
All right. So there's a lot of issues with that report. All right. So first off, if you look on the current ratio, right? So what you do for that, you take the current assets, you divide it by the current liabilities. Right. It gives
and
you
the current ratio is just
it's just a metric in order to see the liquidity of the company, right? So we take that, you take the
liquidity is the ability for the company to pay its current
short-term obligations, right? So you have the current assets divided by the current liability. You look at that ratio at the end of December 2019, that was 0.55, right? Look, no, the issue with that...
So in other words, what that means is that their current assets can only meet half of their liabilities.
Yes, so that means they have a challenge meeting short-term liability. No, what they did in order to fix that, which you can see, was the $24 million bond raise. The issue with that, though, is that if you look on the company's equity going into it, it's about $5 million. Now remember, this company had raised money in early 2019, they had raised about $70 million, they had a $50+ million in equity, and now it's at $5 million, just like a year in, right? Now, that $5 million in equity, if you take that now and you look at the debt that they've raised, the debt to equity, and the company currently has like $12 million of bank overdraft on it. So, I mean, if you look at it, assuming the best case scenario, the debt to equity ratio on the company now would be about over 4 times, in excess of 4 times. Now, when you look at those metrics in tandem, you're seeing a problem on the balance sheet. You look at the income statement, revenue is up at it's up significantly. I think it's over 50% for the year. But profit, expenses is up by over 98%. So what's happening is that the company reported an operating loss of about $30+ million. Now, that's very significant.
21 million, as in for the quarter. You're talking about for the 12 months?
Yeah, for the 12 months.
12 months was 32.5 million.
Yeah, right? And then now, what makes that even more jarring is that if you compare that to the prospectus, the company had said they would have done revenue of 147 million, and they would have done operating profit of 8 million. So they massively underperformed the expectations. And then in the prospectus, they expect 2021 to be the year of big ramp in terms of revenue up big and profits up even better, right? At this rate, you have the question whether or not that's going to happen. Now, I will say it is possible for the company to turn around, but what would be required at this point would be an equity injection, because once you take on the debt, for example, this debt that they took on, 24 million, right? Now I saw somewhere, I haven't seen it come from anywhere else, but I've seen one source says it's 12.5%, right? Now assume that number, which would probably be about fair, assume that number, that means they would have to pay finance expense about 3 million a year. Last year, finance expense was about 1.6 million. So that's going to jump with this new bond offer, right? So the thing is, if the company is not able to turn around instantly, in the sense that the company doesn't turn around like this quarter, it doesn't have much wiggle room left. You're going to have a problem with this company. So in my opinion, the risk profile of this company, it was high before because it relatively small and it was coming a new innovative business idea. So the risk profile was high, it's even higher now. So
interesting.
Yeah, so I think this one for me is something that you don't touch unless I don't know. You have to, I don't think this is for 99.99% of investors. I think at this point it would be somebody like, I don't know, some institutional investors.
Right. That can write it out.
Yeah, that can write it out. Right. For 99.9, this is a no touch.
So just to be a little contrarian, again, I'm not saying that, people should, completely take the opposite view of that, but just to, so the flip side of that is that, to be completely fair, I am, a little partial to iCreate just because it is, as an entrepreneur myself, I understand the trials, right? Yeah. What I do think is that perhaps, they did list too early. Because what we are seeing in terms of the development of the company is perfectly normal for companies at their stage, right? The challenge is with them is that they are
in the public sphere.
Exactly, they're doing it under the scrutiny of the public investor. So every little, machination of their balance sheet and of their capital structure is scrutinized, right? And so it's harder to make any significant changes. That being said, I mean, the truth of the matter is that as an investor, particularly an equity investor, you understand that, okay, it's very risky, right? So the companies they invest in can potentially go to zero. I'm not saying iCreate will go to zero, but that is a risk, right? The flip side is that the point of being an equity investor is that you want to capture upside. So if you are looking for, you've done your research, and you're looking, ideally what you want to do is find diamonds in the rough. Now, whether or not this is a diamond in the rough, it all comes down to your analysis.
Yeah, it will come down to that, but the point to make here, the major point, as you said, if it was in a VC, venture capital fund, not listed private equity, they pump equity in there. What that does to help the company, one, again, they're not under scrutiny, but also, if you look on the company, they actually have been paying finance expenses. Now, if you had pure equity investment in it, then you wouldn't have even that additional overhang. You'd have more closely work with experienced persons and build out the business. And again, you wouldn't have the scrutiny. But because of the current structure on the market, it's not favorable. And remember, you have to bear these things in mind because recently we saw where Sweet River was delisted from the market. And there were warning signs. So, for example, I don't want to digress too much, but for example, when you look back at March 2016, right? There was a particular quarter, in that quarter, their Q4, they had reported a gross loss.
That's Sweet River?
Yes, a gross loss of $906. Right? Now, let's just step back a bit and digest that. A gross loss for a manufacturing company.
$906? $906,000?
Yeah, it's a little loss, but still a loss in that quarter, right? Now, let's just take a step to understand what that means. What it means is that you have a company, let's say a company that's selling shoes, for example, right? You have a person selling shoes. They sell it for $1,000. They buy the shoes for $1,000 from the supplier, after taking cost, and then you sell it for $990. So that's before you factor in staff costs and all of that. The point that I'm getting at is that when you see red flags like this in the market, you need to be cautious because what that showed, that negative, it showed that management was not ready because that is unacceptable.
Fair enough. All right.
Yeah, I mean, I share the same metrics as Giovanni, and I get your perception from an entrepreneur's standpoint. I think the next couple of quarters will be very critical for them to see how they can turn around the business. Obviously, the revenue stream is there. That has been growing aggressively, and they are building out their capacity to expand those revenue streams. It's come down to managing costs and finance costs are looking to double with this new bond. And then
the one good thing with the finance cost refinancing though is that it can potentially in the short term help their cash flows because they don't have the monthly payments. They have the two annual coupon payments, let's say every 6 months, but so it can kind of help some of the short-term cash flow thing, but I think it.
Well, I agree that it is not for the faint-hearted at this point. So you have to be very cautious with that one.
Fair enough. All right, and then 2 more quick things that I want to go over. So Mailpac posted results, and they are, just quick thoughts.
Well, yeah, those are very impressive results. I think it's been overlooked by the issues in the market now, meaning the upcoming listings, Trans-Jamaica, and I think that's generally across the board where corporate earnings are concerned. But yeah, Mailpac looking impressive at $2 per share is a very good.
Yeah, it wasn't bad. 17 times earnings now. Still, the book value is a little low. We knew that going in, and it's building up now. profitable company. Industry is very fractured.
And primarily that's because during the IPO, the company didn't keep any of the capital.
Yeah.
It all went out to paying off debts.
Yeah. So they did. Yeah.
So they cleaned up the balance sheet a little bit, but it wasn't as, you know.
Yeah, solid from that perspective. Right. However, I mean, you look at the net profit margin is over 20%. I mean, exactly. It is performing, and they put up strong growth. So profit was up over 35 for the full year. Revenue was up. So I mean, not much to complain about. Fractured market, but they seem like they're fine. They have their niche and they are working with it.
I mean, because we're kind of running out of time, Randy, quick thoughts on JMMB?
Results were impressive, and that was on the backdrop of the new Sagicor results not being included within the results which came out.
Right. So they posted like what, like a 34% increase in profits?
Yes.
Year over year, 32%, right? And they just did that Sagicor acquisition, the 20% of Sagicor Financial.
22.1 or 0.2.
Right.
Those results are expected to be reflected in the 2020 quarter.
So it's March.
January to March.
31st. So next quarter's results.
Yes, next quarter.
We should start seeing those results factor in. So, so the results we've seen so far have been even without the the improvement in Sagicor. Okay, and then quickly, Orick, you have the last word on JMMB.
The results are kind of fall within my expectations. I know next quarter will be very impressive, as my guy here say.
Right.
So I think it's an opportunity now for investors to take a look at JMMB.
All right. Well, thanks, gentlemen. Thank you. Let's take our final break. And you can catch me on Twitter at Marc Gayle. I also offer classes, so you can DM me about that.
Taking Stock, the Analysts was brought to you by Proven Wealth, Jamaica Money Market Brokers, and Ideal Portfolio Services. That's our show for this week. Thanks for watching, and thanks to Marc Gayle for standing in with the Analysts. Make sure you subscribe to this channel, follow me on Instagram and Twitter at Kalila Ray, and check out my other features, Money Mondays JA, Money Moves JA, and What's in It for Me. I'm Kalila Reynolds. Till next time.